You have joined the Willow Investments webinar on cryptocurrency. So we welcome everyone here. I just want to introduce a few people that you're seeing on the screen right now, and we'll give a quick intro to this webinar, and then we'll begin. So my name is Erica, and I am the Assistant Vice President here at Willow. And Alexandra Dest is our CEO and founder. I know many of you know her already. And Paul Farella is our Vice President and Director of Sustainable Investments. And if you read the intro to this webinar, he's our resident cryptocurrency expert. So he'll be the one who is leading the majority of today. The way this is going to work is Paul is going to give a little bit of a background and overview about cryptocurrency, what he's seeing in the industry, trends. He's even going to do some defining of terms that are floating around out there that if you aren't familiar with crypto, you've heard these words and you're probably thinking, what is that? And he's going to do a little bit of explaining what that is. So the plan is we'll spend a little bit of time in presentation mode talking about cryptocurrency, but then we do want to open up the floor for any questions. So with that being said, I'd like to turn it over to Alexandra Dest to give us a little intro, and then we'll kick off.
Excellent. Okay, so thanks everyone for coming. We will have our disclaimers like we always do for these things, but Paul and I decided to do this webinar, this Q&A, because we've had a lot of questions over the last couple of years, starting to see the slow but actually accelerating adoption of certain cryptocurrencies throughout the United States, actually throughout large multinational institutions, and actually as well with other countries. And I think we could all agree that we're in a serious time of change that I think none of us have experienced in our lifetime in terms of the impact of COVID on our economy. And we thought we're always intrigued in our work to I guess the best way to say this is we're always curious about what other options might be out there, not only for ourselves, as an institution, but for our clients. So we feel that with the, we would say very early adoption of cryptocurrencies, we can't help but be inquisitive. Paul has really brought me to school in this whole subject matter. I'm not even going to begin to profess that I even know a fraction of what he understands, but the little bit that I do understand has my interest piqued. In particular, we're seeing a wide adoption of Ethereum, and he's going to get into a little bit about what that means. With the onset of COVID, there's a lot of discussion these days about not accepting currency anymore, the physical currency. Now, there's a lot of implications of not accepting physical currency. As you know, there's a whole other economy that's run in actual physical currency that will be seriously affected if we actually do move to a virtual currency, if you will, or online technical currency. So with that, I'm going to have Erica do our disclaimers. And many of you should remember this. When the internet first came out, I don't know if many of you remember, there were signs all over malls and shopping places and billboards and so on about the internet highway. And at that time, there were a lot of naysayers, a lot of people who thought, oh, this isn't going to be impactful. What is this? It was so foreign to most of us, this form of communication, this form of information. And we, at that time heard a lot of negativity around the subject. So I think we all know, because we've lived it, the impact of what the internet has done to business, to our lives as a whole. At that time, there were thousands and thousands of internet companies, which led to the internet bubble, if you all remember 10 years later. So we are wondering, and again, curious, if the cryptocurrency could over time be as widely adopted. I don't know. I don't have the answer, but again, our job is to be curious and ask the questions. So with that, I'll turn it over to these two.
Okay, so the disclaimer is quite important in this topic we're talking about, because this is an alternative investment, and it is an unknown space that we're just dabbling in. So very important to hear that this presentation is not investment advice. This is not an offer or a solicitation to buy or sell any security. The information contained within here is believed to come from reliable sources, but we can make no guarantees of its accuracy. Please review our disclaimers and the terms of our use and service, and you can visit us online here and view our disclaimers in more detail.
All right, thank you, Erica. So I'm going to go over some of the basics really quick. I want everyone to understand this is a very top level approach to some of this, and if there are questions on more of the details, we can get to those at the end. But just so that we're all on the same page, I want to make sure everyone's aware that I'm making some broad generalizations and that I am glossing over some of the more technical aspects of this space because it is extremely technical in how it all operates, right? So my little presentation here, I'm going to go over a few different things, and then we're really going to just open this up at the end to take on your questions. So first, I think it's important that we talk briefly about what is money and what is fiat currency. And then a quick introduction to Bitcoin, a quick introduction to Ethereum. I'm going to then touch on the security in the space and the soundness of these things. And then take a real top level view of what the cryptocurrency world looks like. And then provide some thoughts that we've been discussing internally and some of on what we could see how this space could potentially play out. And then we'll open the floor to everybody else.
And just so everybody knows, my role in this is if Paul says something that I feel is a little technical, I might ask him to clarify a term or clarify something or explain something more. So I'm going to be kind of the voice of clarification as he's talking.
All right. So what is money? It just needs to meet three main things, and that is that it is a medium of exchange, a unit of account, and a store of value. One thing that is very important to understand is that the medium that has represented these three things has always changed. It's only been tied to the dollar really for less than a century, I would say. It started with barter, turned into gold. This little graphic here is missing some things. People use stones, salt, all these different things that can meet the idea of a medium of exchange, a unit of account, and a store of value. So fiat money is just currency issued by a government or a central authority that really has a lot of control over that currency. Why is it valuable? Because it's relatively stable and it's something that we all collectively agree we can use as a medium of exchange to exchange our time for this medium, which we can then spend or use to buy things and live our life.
And Paul made I'm going to just say something. He made a really valid point right there where he said it was a collective agreement on the value. That's what money is, a collective agreement.
Right. At one point in time, US dollars were backed in gold, so they did have an intrinsic value because there was actually a physical store that people had used for thousands of years backing it, but that is no longer the case. Our current fiat system is just backed by the faith and credit of our government. Really, and more so to that is just the collective, again, agreement that this is what we collectively decide has value, this is how much it's worth. So that's fiat currency. So Bitcoin was born after 2009, when after the first great financial crisis, there were a bunch of cypherpunks and tech nerds out there who were in a lot of libertarians, and then just other people who thought it was completely inappropriate that a central organization, the central bank at the time or government, could step in and say, well, we're just going to inflate the supply of this currency by whatever number we pulled out of the sky. And yes, it could potentially have some benefits, but it can also have detrimental effects. And you can see this when you look at countries like Argentina or any other country, or Cyprus years ago, any other country that has had currency issues where the government could come in and just start printing and printing and printing. The biggest scare is that it can lead to hyperinflation.
Exactly. And one of the arguments that we have is that we're already experiencing deterioration in our buying power and our standard of living. And it's quite blind to most people, but the fact is that the cost of necessities have gone higher, taxes have gone higher, fees have gone higher. It's hidden in the numbers. So we already argue we're in a very hyper state of inflation. We're just waiting for the gasoline to be poured over the top. So, you know, I think this was part of the argument back in 2008 when these people came on board to start creating Bitcoin.
Right. So unlike a fiat currency, Bitcoin, there is a limited supply. There will never be more than the 21 million that were originally coded in the beginning. And instead of having a central authority that can change the supply or whenever it feels like, or restrict who can use it and whatnot, Bitcoin is a distributed open source platform. The whole idea, and it meets all the definitions of money, where it's a medium of exchange, it's a store of value, and a unit of account. This looks complicated.
Hey, Paul, can I pause you? You go back to that one slide, just to clarify, because this question I get a lot. So like, what is a Bitcoin? Is there a thing? And when you say there's a limited number of available, how does that happen? Can you just break that piece down a little bit?
Sure. So Bitcoin is a blockchain, and Bitcoin is the native currency of the Bitcoin blockchain. So think of it as you have a ledger, and the unit of account, a ledger that is called Bitcoin, and the unit of account on that ledger is also called Bitcoin. Okay, so if I am Alice, who's here, and I want to buy something from Bob, I can send him some Bitcoin and it's recorded on the Bitcoin ledger. So this is my address, this is where I'm at, this is where I hold my Bitcoins. I like what you're doing, I want to send you Bitcoins. That's all doable. That transaction, and I'm not going to get into all of this unless someone wants me to at the end, throughout how all the mining process works and the rewards that are generated. But basically, a series of transactions from A to B are created. They are kind of grouped together and it forms what's called a block, right? And then that block is validated by all the different distributed nodes that are all around the world. People who have full copies of this ledger are all collectively agreeing and say, yes, this new block, I have the same picture of it that you do. Everything matches on my ledger, that matches your ledger, that matches the tens of thousands of copies of this that are all over the world. When everybody collectively agrees, that block gets added to the block behind it and forms a blockchain. Right? That's why they call it a blockchain. Ultimately ending up with a Bitcoin from Alice being in her address sent to Bob in his address. And it's what's called immutable and completely final. So there's no way that transaction can ever be edited, and it is recorded for as long as the blockchain exists.
And to move the currency is quite simple. So it's literally, from the, it gives you a basically you get a digital sequence on the phone. It's encoded in a picture. I wish I had it here actually. And it's literally just putting it up like this, getting the address it gets sent to, and it's done. And it's a permanent record.
It's instant, well, near instant, borderless, and there's no, I guess, governing entity that can come in and censor your transaction.
So Paul, just to clarify again, so in this model, the reason that we sometimes call cryptocurrency like democratized or distributed is because of what you just explained about the ledger, where all these people everywhere are all confirming a transaction at the same time to find out if it's true, if it's real or not. And can you just compare that? Like, how is that different than how it works with US dollars, for example?
Right. Our current system is full of gatekeepers. So you have centralized entities, which would be payment processors, credit card companies, banks, central banks, even the government itself, who are sort of overseeing everything. Where I think it was in 2009, or 2011 maybe, with WikiLeaks, PayPal said that they would shut down donations to WikiLeaks. And so WikiLeaks went to ask for donations in Bitcoin instead. So it's a way to really democratize a unit of exchange. So nobody can prevent somebody from using it in a sense.
Sounds like a great place for criminals.
Yeah, so criminals have used it, but,
Mm-hmm.
and this is what most of the kind of financial or just the media out there forget, is that there's a record of the transaction permanently broadcast on the blockchain. So any criminal who is using this blockchain, their exact usage can be traced. As soon as they find an off-ramp or a way to, you know, exchange that stolen Bitcoin or whatever into cash, they've exposed themselves. So there's a big narrative out there around like, oh, all these criminals are using Bitcoin and it's like a safe haven for them. It's completely not true. Yes, there are some bad actors on the network, but the vast majority of it is legitimate transactions. So I know that's a lot, and there's many more nuances to Bitcoin and how it works, but the basis is that it's me sending something to you. It's a peer-to-peer electronic payment system. That's the simplest way to look at what Bitcoin is. Peer-to-peer, meaning I'm not relying on a third party, where even something like Venmo right now, where I can Venmo somebody money, it still goes from me to my bank. My bank says, okay, we're going to allow this. And then they talk to whatever the third party apps are. And then they say, okay, we'll allow this. And then they move the funds. So you're still relying on all these third parties who are also taking fees while they do that type of transaction. The purpose of Bitcoin was to cut out all those middlemen and say, no, I want to do business just with you. I want to send this to you. And I know that I am sending my coin to you and that is final. And that's it. There's no third party involved, you know, checking it out. So that leads to Ethereum, which is and I'm very excited about, and full disclosure, I'm very excited about Ethereum. I think there's really a lot here. It's taking the idea of sending that unit of account that Bitcoin did, of just, here's a token that I'm going to send back and forth, and whatever value that token is what its value, what we collectively decide that token is valued at is what it is, and that's how we transact back and forth. Ethereum takes it a step further, so that instead of just sending this token back and forth, you can actually put executable code on the blockchain, which allows for the creation of these things called smart contracts or programmable money. So now I can put conditions on that transaction. So instead of me just saying, okay, I'm going to send this transaction to you, I can say, if conditions A, B, and C are met, and you meet conditions A, B, and C, or D, E, and F, then this contract will execute and you will get paid. And so I'm going to get back to this slide, but I just want to show this as an example.
Perfect.
Instead, like currently, if you're going to buy a house, for example, you need to talk with lawyers, brokers, insurance, or different real estate agents to facilitate all that transaction, right? You need all these different third parties to get all the different contracts and paperwork and everything organized.
Title searches,
everything. Right. With a smart contract, you could code all of that logic into a smart contract that says, as long as these conditions are met, then funds will move from your escrow or your Ethereum account to the other party. It's a lot here, right?
So in this example, Paul is showing, so when, this is the most practical example, is we're buying a house, we're going to our attorneys, we're, buying it through the agent, we're getting our title search. It takes time, we're getting the loan, so on. So it goes from buyer to seller, it's a longer process. Conceivably, we're going from, I want to buy this house, to immediately being able to do a title search, which is there now for forever. Now we're going to be able to do a very quick title search in an instant, and conceivably this can cut down the amount of time that it takes to actually close on a house by a very significant margin.
Right, and just allowing this ability of having a smart contract that can execute these things, I mean, the implications are massive. Here's just a quick overview. I'm not going to go through them all, but a quick overview of where smart contracts could potentially provide benefit to current industries. I mean, it affects everything. I know there's a lot of development currently in the financial space where people are using these smart contracts for different kinds of derivatives trading, where if condition A is met, then this contract executes or whatever. And I can go into all that later if we're interested. It's called DeFi, or decentralized finance. That's kind of the buzzword lately.
And that's already happening in industry. So, you know, that's already in practice.
Right.
You're saying that the things that are listed here are use cases, meaning they've already happened. They're not hypothetical. It could be used here. This is where it's being used.
Right. There's some really interesting ideas here where identity, you can use this for identity. So, for example, in healthcare, right now, you know, who has all of your healthcare data and all those records, and what are they doing with them, right? Here's an opportunity where you could put all of your information in a smart contract that you control. And then when you meet with your doctor, you can, through a smart contract, determine what pieces of those information you want to share. It completely revolutionizes this whole space in that kind of sense. It can, in the law world, it can replace all kinds of different legal documents. There's opportunities in insurance, and then there's a lot of development currently going on in supply chains, because you can completely cut out counterfeit things or fake products. If it's backed on a blockchain, you know that there is this solid audit trail behind it that is immutable. So just touching on that. Okay, so I want to talk a bit about the security of blockchains. The largest blockchain, obviously, is Bitcoin. And this is just a map that shows what's called listening nodes. And I won't get into the details of that, but you can see that it's dispersed across the world. That in order for somebody to hack Bitcoin or to get in there and change things, conceivably, they would need to own half of all, or 51% of everything you see on this map. Now, listening nodes are different than non-listening nodes. I won't get into the details, but when you combine them all together, there's something like 80 to 100,000 different nodes around the world who are all supporting this network. So in order for Bitcoin to get hacked, you have to literally convince 51% of those nodes all around the world that what you're trying to change is correct.
Would you just back up a little bit and just say what nodes are specifically, like kind of put that into context, if you would?
So when we talk about security, if you think about it currently, your dollars are most likely at a bank, right? And what is that bank's security, right? You're really relying on one entity to safeguard your funds. Okay, on a blockchain, that safeguardedness is distributed around the world. So every node is basically everyone who has a full copy of the blockchain. So you can't go to one of these nodes and try to make a change to steal something, because everyone else is going to say, hey, my picture of the blockchain is different than yours. And since we all come to consensus that it's different, yours is wrong, so we're going to exclude it from the next link in the chain. So it's, I know there's some interesting ideas here. The other piece is a cost. And so this is a website somebody did where how much does it actually cost if you wanted to try to hack one of these things? To hack Bitcoin for 1 hour would cost you over $570,000. You would need to hack it for multiple hours to make any real changes. What some hackers do is there's, I don't want to get too technical, so Erica or Alexandra, please stop me if I go down the rabbit hole too far. But people can sell computing power, which is called hashing, and that's what gets all the mining done for Bitcoin and currently for Ethereum or any proof of work coin, and I can get into that later. In order to get enough hashing power to attack one of these networks, you first have to buy all the equipment, or you could rent that hashing power. In order to do it to Bitcoin, all of that Nice Hash. So let me back up. Nice Hash is a website that allows you to rent computing power that you can then deploy on a blockchain in an effort to earn rewards or different coins for mining, right? If you were to take the entire, and Nice Hash is the largest one of these shared computing power companies in the world. If you were to take all of their power and direct it towards Bitcoin, it would only represent 1% of the hashing power needed to even attempt to attack that network. It's just another way to show how secure the network actually is. Another thing everybody should be aware of is there are articles that pop up in the news all the time talking about Bitcoin was hacked, or there was this big scam or hack that went on. And it's important to know that the blockchain itself has never been hacked. It's so far in its 10, 11-year history, there's been no successful hack of it. It has always been third parties who have improperly stored their Bitcoin who have been hacked because they had poor security of their own. So it's just a nice piece to know when talking about security. It's not something that somebody can just come along and hack if you are holding your private keys and holding your Bitcoin yourself. If your Bitcoin is on an exchange or at a different, you're relying on a third party, there's an opportunity that that third party's security is not up to spec, and that's what gets hacked, and that's what gets reported in the news.
Yeah, and so to just back up just a little bit, when one does buy a cryptocurrency, you have the ability to create your own keys, your own codes, your own keys, and that would protect you from any of the hacking that takes place.
So that's Ethereum and Bitcoin, basic ideas there. This was done yesterday, so I'm sure it doesn't really matter that much, but a quick snapshot of the cryptocurrency world. There are currently over 6,500 different cryptocurrencies floating around out there, traded on over 26,000 different markets. Sounds like a lot. I'm just gonna say it. About 95% of them are junk, which I'm sure is actually similar to what was going on in the .com bubble or boom too, where you had all these, you just throw .com at the end of your company name and all of a sudden it's worth something, right? So the vast majority of these cryptocurrencies are pet projects, or unfortunately, there's a large amount of them that are actually scams or pyramid schemes too. Currently, the market's cap, which is a terrible metric to measure this by, but it's all we really have right now, is around 350 billion, which is pretty small. I mean, that's what I think Microsoft's worth a trillion dollar around there, $1 trillion market cap or so. So it's a third of that, a third of one of these companies, which makes it a frontier technology and a very much so still emerging asset class. This list here is just kind of the current top 13 or so. And if anyone has specific questions about any of these, I encourage you to save it for the end, and I'll make sure I can share my thoughts on what I see in the space is good.
And we have a few of those questions that came in earlier, so we'll address those at the end.
Mm-hmm. Right. To put it in perspective, this is a chart of the total market cap of crypto, and we're currently at around that 350 million. At its peak in the end of 2017, it hit about 750 billion. So there's potential, right? High risk.
So one of the things in our work that Paul and I do is we track that chart that he shows there of the market capitalization. We track trends actually in charts themselves. And when we start to see charts, and Paul, you can show that process, thank you. When we start to see charts consolidate in this manner, you can see Paul's pointing out a number of peaks, you see. And normally when we start to see any stock, any market break above, you can see what we call a consolidation period. When we see it break above something like that, it tends to be a very bullish sign. On the other side, at the low points, if the market's down, you can show, if the markets were to break down below some of these points where it continually touches, that would be more of a bearish sign. So we're at this, what we consider a pretty significant inflection point here for cryptocurrencies. Will it break above these tops and go higher? And if so, we see that would give it great potential. Just if we were just going from strict technicals.
Right. And, there's a website, I think, called bitcoinisdead.com that is, or bitcoinobituaries.com or something like that, which has tracked every single article that has said Bitcoin is surely dead after this since 2009. And it's hundreds of articles long, and yet it's still here and it's actually growing and thriving. So it's just something funny. This chart on the right here kind of just shows how much of the cryptocurrency space is represented by different cryptocurrencies based on their market capitalization or their size. And what's interesting is that over time, Bitcoin's dominance, which is shown by this orange color, has decreased as altcoins, as they're called, or or other cryptocurrencies have started to gain more market share. And Bitcoin's at the top, and then it looks like it's other, and then Ethereum. And what's interesting is that the majority of the other are what are called, and I don't need to get into the details here, but ERC20 tokens that operate on the Ethereum platform. So they are part of Ethereum. All right. So possible future and some potential risks. I had to add the little Eye of Sauron over here because, and this is a emerging trend or theme that I think Alexandra and I both think we could really emerge over the next few years as the dollar's reserves currency status is challenged, or as people and governments collectively agree that we want a more efficient way to transact money in our globalized world. So the two things that I'm really looking out for are, will a central bank-backed digital currency come to fruition? And for anybody who it was on our new Green Matters mailing list, there was actually an article in there that was talking about this, where you had the Bureau of Economic Research is actually putting papers out about how that would look. So this isn't just some idea. There's actually people who have the decision-making power who are actively exploring and talking about these kind of things. This would be, honestly, it would be fantastic for central banks to issue a centralized currency, only when I put on their hat, because of the amount of control that it gives them over that funding. It's scary. That's why, in my opinion, that's why I have this little Eye of Sauron on here, who can see everything, because they could literally see and have complete control over the monetary system. Another thing to watch out for is maybe the government will say, we have these guidelines, but let the free market decide what happens. And that's where you could really see a Silicon Valley-backed digital currency come that might take over. Facebook tried to do this with Libra, but I don't think they really had the vision at the time, or really true comprehension of what they were doing. Because when you look at a company like Facebook, who has, I forget how many billions of users, I mean, they're like, I think if you made them a country, they're the 6th largest country in the world or something like that. But if they had a native currency like Libra, and then you had a company like Amazon hop on board saying, yes, we're going to use this currency, I mean, you just displaced, what, 2/3 of the world's central banks. So it could happen. On the plus side, this kind of technology can have massive disruption in all different kinds of industries, from automating things to completely replacing different third parties that are needed, removes middlemen. So there's also all the disruption that can come from that, and the boon that can precede that when jobs are initially created to first start exploring all of this. So we're still very early in that space, but that's something that we're definitely keeping track of and looking towards. And then there's the social side of this, where you actually have you could potentially have a democratized medium of exchange where it's all peer-to-peer based, which is great. So I'm going to open it up now. Yep. So just some other topics, things that, if you weren't aware of it's worth checking out. There's a whole trend in stable coins and altcoins, and these are things that are trying to lock them in at a certain specified value and then use smart contracts to keep that value in place. There's a whole world there. DeFi, or decentralized finance, there's a whole world being born there. Tokenization of assets, this is something that is really starting to take off. I've seen now articles where entire real estate ventures have been tokenized. So instead of issuing shares or having a REIT where you have however many users or however many participants, it's all tokenized and done on a blockchain instead, because it's cheaper and it's faster and it's an easier way for people to then sell their share if they want to. Art is starting to be tokenized, where a piece of art can say this piece of art represents, there's 1,000 tokens that each represent 1/1000th of the value of this art piece, and it allows for something that is traditionally illiquid to now become liquid. There's also all these different bond pilots that have been run by all different companies. Societe Generale did one about a year ago, actually, where they had a whole bond issuance done on the blockchain. And then you also have people like Overstock.com, and they have their T0 network, which is another blockchain, and they're working on tokenizing assets too. They recently paid their first dividend in cryptocurrency, in their cryptocurrency native to their blockchain. But it's a whole new approach to this kind of stuff.
And Paul, just real quick, when you keep saying the word tokenized, will you just quickly say what tokenized, what does that actually mean, tokenized?
Yeah, the basic idea of it is that if you have, I'll use art for example, right? So if I have a piece of art and I want, a whole bunch of different people to invest in it and have ownership of that piece of art, you can tokenize the art. So I'm saying this art is physically stored in this vault, but here's the digital representation of that art broken into this token, okay? And then you can distribute that token to whoever wants to buy it or sell it or exchange it or whatever from there. So the idea of tokenization is to take something in the real world and then move it to a digital platform and break it up into parts which can then be exchanged.
So Paul, I have to ask this question. If somebody, when does something like that get monetized? Is it when that person pulls that art out of the vault and sells it, and then it monetizes to the people who bought it as a token? Okay.
Yes. Mm-hmm. There's a couple, I believe, NBA basketball players now who have actually tokenized their contracts, where they said, my contract is worth X million dollars, and I'm going to put it on a blockchain and then sell it, basically. So there's speculation involved, right? That the asset price will go up first. And then second, it allows the fans to participate and be a part of that. If that athlete turns into an even greater success, that success can then be monetized and shared with the people who.
And it would get monetized just by somebody selling their token of that NBA player's value for more than what they paid for it.
It creates that initial liquidity of now I can exchange it with whoever, anywhere, at any time, and so I can be made whole, or it can be held for however long you'd like, where it either appreciates in value through speculation or the underlying asset in itself appreciates in value. So the demand for it increases, and therefore the value of your token increases. Right. So I know that was, let's see what else. So if anyone is interested in the mining, there's proof of work, proof of stake, delegated proof of stake. There's like a whole list of these different mining things, and all mining is just a consensus mechanism, so that everybody on the network can uniformly agree, yes, this data is correct. More real world adoption. I just saw an article the other day, SAP, they're a massive multinational company, just did an integration with Ethereum. So the fact that these kind of companies are actively developing and looking at this space, hiring people who know how to do this, and exploring it this is just the first steps, I believe. Also scams, pyramid schemes, fraud. There's a ton of that in this space. And it's just worth being aware. If it sounds too good to be true, it probably is.
And can we just say a bit more about that? Because I think that's one of the highest risks for people listening to this call. The reason it can be scammy is because this is not a part of it being decentralized is that it's not regulated. So whereas in US dollars in the stock market, the SEC puts rules out to try to help protect investors, and it requires companies to disclose certain things and to be validated as actual companies to receive investment. There is no entity in this world of cryptocurrency that is doing that kind of checking. So a company, and this is a big scheme that we see a lot, a company can pop up and say, we're a new company, we're gonna do an initial coin offering. It's like the equivalent of an IPO, but in crypto world. Yeah, and they're gonna say, all right, so we have a new token, it's called the Willow coin, and everybody, you can buy it now for $10 a coin. And then the company can just disappear and take all your cash and go away. Like that actually can happen here because nobody regulated that Willow coin and made them be required to pay back any investments. And Paul, I don't know if you want to say any more about that, but I feel like this is one way we can help people who are listening be aware of ways they could be tricked.
Yeah, and what is interesting is that because it's a complex idea to begin with, and it's a complex world on how this all works, it creates opportunity for, well, there's a built-in it creates opportunity for bad actors to play on people's ignorance of the space, because it's complex, it's not simple, it takes a lot to understand, well, how does this consensus mechanism work, and how does a miner actually get a reward? You know, it takes time to read and understand that. And so unless you're actually taking the time to dig into these things, someone throws a lot of buzzwords at you that sound really good, well, maybe there is legitimacy to that, but many times there's not.
We have, okay.
Go ahead.
We have some questions coming in through chat. I don't know if we're ready there yet.
One other topic to touch on is
Okay.
just this idea of being your own bank, which I find very fascinating with cryptocurrency, is that when you own your private keys and you have your crypto on your private wallet, it's yours and you are 100% responsible for it. I guess that's the big difference between this and using like a bank, where you have the bank. If you send the funds to the wrong address, you can call your bank and hopefully get that reversed. You can't do that with cryptocurrency. Everything is final. But being your own bank allows you to then have complete control over where you're sending your funds. It also, with smart contracts, there's ways that you can take collateralized loans out against yourself. There's all sorts of interesting things that can be done that way too. So with that, really, let's open it up.
Okay. All right, so there's several questions that came in the preview, in the registration process, and I want to get those on the table.
Yes.
But I see 2 in the chat that are actually similar, so maybe we'll start with the 2 in the chat and then I'll pull in the others.
Yeah, and I have some other that have come to me privately as well. So
okay, great. So these first 2 are really talking about, earlier you said fiat currency and then you say Bitcoin. So the question is Bitcoin in one particular fiat currency? How are they interchangeable or different? How does that work?
Right. So at its base, fiat currency has no intrinsic value other than full faith and credit of the government, right? Most fiat currencies are completely controlled by centralized entity that can change the supply of it as they see fit or when they desire. With something like Bitcoin, it is not a fiat because it has this intrinsic value of this coin that is in a finite supply. There will never be more of it made.
And then the question about which fiat currency is Bitcoin in? That's
okay. So Bitcoin, it's best to think of in and of itself as its own currency. Bitcoin can be denominated in any other currency. There are markets for Bitcoin to euro, Bitcoin to yuan, Bitcoin to yen, Bitcoin to the US dollar, Bitcoin to pesos. It's its own currency. So there are exchanges that exist with any other currency.
You can buy it and sell it in either of those currencies.
Yeah, it's pretty easy to really convert your Bitcoin back to currencies at this time.
Mm-hmm. Fun fact, by size, Bitcoin is currently the 8th largest currency in the world. Fascinating.
Mm-hmm.
And how much does Bitcoin cost right in this moment in US dollars for one Bitcoin?
So 11.
Last I checked, it was around 11,000 or so.
Yeah. Yeah. And that's the other thing, you can buy, you don't have to buy $11,000 worth, you can buy fractions.
Right. No one needs to own one Bitcoin. You can own 0.00001, and you can buy that and still own it if you.
All right, Alexandra, you do one of your questions and we'll go one for one.
Okay, all right, hold on, just let me look. Let me get back to it, because if you are coming in, hold on.
I can start
Okay.
with
Well, I'll do this one. It's here. So somebody commented on athletes being early adopters, turning their contracts to coins, and they're concerned of that because most athletes die broke, as we all know. The contract, from what we understand, is worth the net present value of their future salary and bonus. So where would the magic value, so to speak, where would the value be in this for not only the athlete? How do they win from this? I think that's really the question here. How do they win from this, would you say, Paul? How does that function?
Right. So the athlete wins on, number one, his fan base speculating that he's going to be bigger in the future. And then number two, the way most of these contracts are written, they don't, if you sign a $10 million contract, you're not just handed a check for $10 million that day, right? This allows the athlete to basically crowdfund that contract in a way and have access to that capital instantly.
So basically they monetize it immediately.
Right. And that's just one example. I'm sure as this whole world gets explored further, someone's going to poke a hole in it or find like, oh, wait a second, maybe that wasn't the best idea, as there is a lot of speculation built into that. But maybe it'll be great. Maybe it'll be the industry standard in a few years. At this point, I don't know.
So I've got a question here from the pre-registration. Can you say the difference between crypto and token economies? Are those different?
So each cryptocurrency has the potential to have its own economy, right? How it works and how it gets valued, and then who uses it and who's actually giving it that value. Tokens, in one way to look at them, and I don't want to get too complex here, but on Ethereum, just as an example, on the Ethereum blockchain, you have the ability to create tokens, and these are native assets that live on the Ethereum blockchain that aren't Ethereum, right? And so if I am for example, the whole ICO craze that happened, the ICO was initial coin offerings. It was an unregulated way to raise money. But if I'm a startup and I have a really good idea and I want to use a blockchain, and I don't want to get into distributed applications, but maybe I should. Either way, yes, the short answer is yes. There is a difference, and each cryptocurrency has its own economics or tokenomics. You could use it interchangeably, though. It's a definitions issue, I guess.
We have a question, somebody asking where the currency exchange for Bitcoin is. There's several central exchanges for this. Paul, could you just touch on that a little bit?
Yep, there's a few ways to buy in. First, there is the peer-to-peer route where you just find somebody who is willing to sell you their Bitcoins and you do that transaction face-to-face. A lot of issues around security with that, though, and who you're dealing with, but it's a way to get around regulators if that's what you wanted to do. There are several on-ramps, US-based on-ramps, that are legitimate. They have the same security as, say, JP Morgan. I mean, the security of these companies in the US, at least, is very high. I can't say the same for exchanges in different areas of the world. But for example, coinbase.com is one. They've been around for almost 8 years or so. Gemini.com is another exchange based out of New York. This is an exchange that's owned by the Winklevoss twins, and they were, some of the original developers of Facebook. And then there's another exchange based out of San Francisco called Kraken, like the squid. but all of these are on-off ramps, as I would call them, places that you can go, sign up for an account, link your bank account, safely transfer funds to it, and then exchange those dollars for different cryptocurrencies. And then when you want to sell them too, you can easily sell them on these exchanges and then transfer the cash back to your bank. It's come a long way since even 3-4 years ago with how easy it is to do this now. And then there's another way to get exposure, and that's through people like us who find different investment vehicles that are out there that are invested or have exposure to this space, either in cryptocurrencies directly or in investments in the companies that are building out the infrastructure, different types of fintech plays or things like that. Can also provide exposure to the space. I just read an article recently, forget the name of the company, but it's a top 1,000 company in the country, and they have just moved a portion of their cash management strategy to be denominated fully in Bitcoin. Interesting.
So this ties into that question. Why are countries and companies interested in this space right now?
Sure. So speculation is one of the reasons. Companies are interested in it because once these things mature and they can really scale, the efficiencies that can be realized will save them obscene amounts of money down the road, just from simplifying processes and automating certain tasks, while having all the security needed to make those go through successfully. That's why companies really like the space. Governments, my feeling is for governments is mostly it's a control thing. It just gives them much. Right now, the dollar is used for more crime than any other currency in the world, if you really think about it. Cash is, for the most part, untraceable. This gives government a way to say, okay, we know where every single bit of our, bit in 1 and 0 is for our digital currency, and we know what wallets it's held in. And a good government would also know who that wallet is tied to as a person, so you can see complete transparency of these, and just what the power that then gives them is massive. Not to mention, it's also way more efficient than our current system too.
And to clarify, the example you just gave was when the government themselves has the token and the cryptocurrency. That's the way they would have control. But in our current system where people are using Bitcoin on the open market, there is no government control over that.
Correct.
So we have an interesting question that just came in, so I want to share this with you. What happens to my coin when multiple holders, past and present, coin holders disappear due to losing their password key, illness, death, pandemic, war?
Yeah, so that's a great question.
Let's hear what you have to say.
Yeah,
are we at any more risk than any other currency?
It's gone, right? So if I had a wallet, so first off, you can store your cryptocurrency on a wallet that you personally own, or you can leave it stored with a third party like an exchange. All right. If I have a wallet that I personally own, I own what's called the private key to that wallet. If I die and don't share that private key with anyone, that cryptocurrency is lost forever. It is not retrievable. If, let's see. So if you wanted to be your own bank, it would be, the responsibility falls on you to create a contingency plan for what if something happens to me. How do I make sure that a beneficiary or somebody I want to can have access to this? And that would mean you would write down your private key and put it in a safe somewhere, or talk to a family member about, oh, I have this USB and on it is my private keys, and I keep it in a safe or a lockbox somewhere. And in your will, it says, in the event that I pass, they have access to that. But it would fall on you. This is the other piece of crypto in general, is there's a lot of personal responsibility that you need to take if you are going to be your own bank or hold your own cryptocurrency.
There's been 2 questions about other altcoins, Dash and Ripple. Can you speak to those 2?
I can't speak too much to Dash, other than that it's been around for a long time, and I believe they follow what's called a delegated proof of stake consensus mechanism. And basically what that is instead of having an entire network distributed all over the world, there are maybe 100 or so node operators that the users of the currency collectively agree on. And so they, with their votes, so they can use their Dash or their coin to vote on who are the super nodes that are going to validate. And I know it's been used as a cash thing. I think Dash was really big in Japan for a while. I'm not sure if it still is, but I haven't followed Dash honestly too closely. What was the other one?
Ripple.
Ripple, right. So Ripple's interesting. Ripple's main objective is to facilitate payments. So the thing with Ripple is you have Ripple and then you have XRP, which is Ripple's token. Ripple, the company, I see a huge value proposition there as they're trying to replace things like SWIFT, so that instead of having international settlements take days to complete, they're saying you can use our platform and it can settle nearly instantly. So I think there's a lot of promise there and a lot of potential for what they're trying to do. Their token, XRP, to me, is any value there is just purely speculative. The Ripple team issued a hard cap at, I think it was 100 billion XRP tokens. Of that 100 billion, the Ripple team owns something like 80 billion. Now they keep 50 billion of those locked in an escrow, but that escrow pays them something like $1 million every month or something to fund the operations of their business. They also use those tokens to sort of bootstrap or onboard different banks so that they can say, okay, we want you to use our network. Here's 200 million XRP so that you can start using them to see how it all works. So I don't personally think that the XRP token has value, but the company, what they're trying to do, I think is good. They could have some good breakthroughs there. It's now I have to caveat all this stuff with the crypto world is insanely irrational. So you'll see these massive spikes and these massive drops based on speculation, right?
So somebody asked a question, Paul, about if somebody wanted to open a Bitcoin account, where would they do that? So, I'll just answer this. This particular person who's asking this question is a former trader, retired trader from the New York Stock Exchange. So there are, just like there are broker dealers by which you can do transactions, there are actually companies where you can actually buy and hold your currency. And we could, provide a couple names if you want to call privately. We can list those out for you. Let's see, or we could just provide that to you in a link. Let's see, there's some other questions that I think are quite interesting. What would stop, say, the Federal Reserve, which is, from using its unlimited ability to create money to buy the entire capitalization of Bitcoin and therefore own, regulate, and control it?
What's stopping them from doing
What
it?
would stop them from doing it? Like, what's the probability? I'll just rephrase that in a different way because I find this question really interesting.
Yeah, so a few things there. So the Federal Reserve really, their money printing is just using accounting tricks to add Federal Reserve notes to their 24 member banks. It's then up to those member banks to loan those reserves out to stimulate the economy. What's stopping a government from putting together enough funds to just buy it outright?
Or a company. I mean, we could say a government or a company, from like
even
Amazon just buying out all of Bitcoin and then owning it.
Yeah, so it would be impossible. And I say that because it's impossible right now for me to go out into the market and say, I am going to buy every single Bitcoin out there. Because of the limited supply and how basic supply and demand works, as that supply keeps getting eaten up and bought, the price is going to skyrocket exponentially. And so eventually you hit to a point where for a central bank or government to purchase it, they would have to create so much money out of thin air that every
They already
single
do.
person would lose faith in it, because it's no longer something you can put faith in, really.
I find that really, that's a very intriguing question. I think overall, you definitely have to have willing buyer and willing sellers
Right.
into the market. But one to definitely, I think, ponder anyway.
So question on volatility, we touched on this a bit, but is there any way to measure a volatility index on this, on any of these currencies? And do they track with anything else if you're tracking them?
Yeah, I'm pretty sure there are a few sites out there that do track Bitcoin volatility, but really, I think, at least in these early stages, it's more going to just show, where are we in a hype cycle. And there's a thing, if anyone wants to look it up, it's called Gartner hype cycles, and it's an idea of behavioral economics, or just how hype can happen, where that's why you could see these exponential growths happen in this cryptocurrency space, because the hype train gets going, everybody gets excited, lots of FOMO generates, or fear of missing out, and people just keep piling in, and it builds upon itself. Then it usually comes down, and there's a trough of disillusionment, and then real development in the space, which is what I think we've seen over the past 2 years or so from the 2007 peak, is that the past few years there's been a ton of development in this space, and now it's getting ready to build up to something new. We'll see.
There was a question, I'm not sure how we want to answer this, but someone did ask about Willow's particular investment strategy around crypto. I do know we have both clients and non-clients on this call, so I'll
we're because we do have non-clients on the call, I'm not comfortable. You have to, just so you all know, we are regulated by the SEC. We're very cautious and make sure that we don't divulge certain things that we can't to non-client base. But let us just tell you, there are some exchange traded funds out there that do track Ethereum and Bitcoin, but they both come with risks, and
you pay a massive premium for them too.
Massive.
Well, a large premium anyways.
Yeah.
Okay, so it seems like the questions have slowed. I'm gonna just give another second or two for if there's any final questions. And if you haven't figured out how to use the chat or been able to type your question in and you'd like to just unmute yourself and ask, we have time for maybe one more question.
And while somebody may be pondering a question, I just want to say something around volatility. I do find volatility measures and indices very useful in our work. It just seems that this particular space is quite volatile, so I'm not sure how useful the data would be at this point.
Right, to share some of my own personal experience in the space, in a crypto bull market, you can have a 60% plus correction, and it's still a bull market. It's the Wild West a little bit.
And that can happen. And that can happen in a very short period of time.
Oh, another piece that I'll just, because I can talk about this stuff for days, I'll just share it with everyone, is that a lot of the times in the news too, you might see, oh, this cryptocurrency spiked 8,000% overnight or something like that. And it's like, oh man, I wish I was in that. But what you have to understand is that liquidity is so small in these spaces. Some of the crypto pairs that change on exchanges, only $5,000 or so moves on a daily basis. So if anyone was to step in with, $20,000 in an average $500 market, you could literally buy up the entire order book overnight and send it up thousands of percent. So you got to take that with a grain of salt when you see that in the news too.
Yeah, it doesn't always imply a trend. It might just be a random incident that.
Right.
Yeah. So how shall we close?
Well, I'll just close by saying thank you, Paul. I think all of you can see the depth of his knowledge and expertise here, and I feel, extremely fortunate that Paul is part of our team. and
Can we just say how long, are we allowed to say how long Paul's been playing in this space?
Paul, how long have you been playing in this space?
I've been aware of it since 2011. I tried to buy in a few times, 2014 or so, but it was so sketchy at the time. I mean, there was no easy way for me to link my bank account with a party that I trusted to get in. So it wasn't until 2016 that I decided, all right, I'm really gonna, take the risk and jump in and explore a little further. And really, since then, I've just been trying to stay on top of all the developments in the space and as aware as possible of what I see happening here, because I truly do believe that, and it might not be Bitcoin, it might not be Ethereum, it might not be any of the other current top 10 or so cryptocurrencies, but I do see this technology, smart contracts and blockchains as a whole being a disruptor. I mean, I equate it to the internet in 1995 or so. That's where we are in the cryptocurrency space. So give it another 5 years, and I think it's going to be much more present in our lives. And I actually believe that it will be way down the road, but it will be the backbone of our economy or how exchange happens, just based on the efficiencies and possibility that is and potential that can be unlocked with this technology.
Keeping in mind that's Paul's opinion.
My opinion only, right? Not saying that that's going to happen. It's just an opinion I hold that I think that there is the possibility for that.
Exactly. All right.
Thank
So
I'd like to I make myself available to everyone who's listening. Feel free to email me if you have further questions to paul@investwithwillow.com.
yes, thank you everyone so much for joining us, and thanks Paul for your real thoughtful presentation, and Erica for facilitating all of this for us.
Yeah, any additional questions, you can find us online, investwithwillow.com. If you're not already on a mailing list, we do have a mailing list. You can find the way to sign up for that online.
Oh, too, and we've recently launched a weekly newsletter that we call Green Matters, and we will have one of our sections on there. If it's not weekly, it will be bi-weekly at least, but it will at least cover, the things that I'm looking at in the cryptocurrency space. So different developments. One way to see what I'm looking at too.
All right, everyone. Thank you so much for joining, and we'll see you next time.
All right, thank you.
Bye.
Bye.